Good morning, traders. It is Tuesday, August 14th. Taking a look at the morning charts, we've got the US dollar index. You can see we've had a nice multi-wave pullback here. We still are trading up at, we came up, tested key resistance last week, been pulling back in a nice controlled manner. We are back down into a support zone along here, having a little bit of a bounce this morning, which is putting a little bit of pressure on the market here. We really do need to see the US dollar index start to move up for the market to start a correction. Historically, seasonally, we've seen August, usually near the end of August, we see a pullback in equities, and usually September we see a further pullback right through into October. So we're starting to fall in line with that. As we near August, we're getting closer into the apex of this pattern, and there's a higher likelihood of the US dollar starting to move up and for equities to pull back. Looking at the US dollar index, this pattern here, we've had a nice rise and a nice controlled pullback. If we look at bonds, these tend to move together, and you can see we've had similar price actions. Bond prices have fallen into a nice falling wedge here. We did get a little bit of a pop. We came right down into support, and we're having pretty much the same price action as we're seeing in the US dollar. We're having a pop and a nice controlled pullback here. Overall, I do feel as though we're getting very close to seeing the US dollar and bonds start another push higher, which means obviously if the dollar goes up and money goes into bonds, that means money will be flowing out of equities and into those two safe havens. So taking a look at commodities, here is the crude oil chart for this morning. Overall, yesterday we saw prices pull back in the morning and in overnight trading, and this morning we're starting to see them just come back up a little bit. I pointed out yesterday that yesterday morning we were trading right up at these little spike highs here that would probably just see some sideways action or a pullback, and that's exactly what we got. We're still flagging here, kind of moving sideways. There was some pretty good selling volume yesterday. You can see this big spike in selling, so sellers are still in control. We are trading, just pull this area up here, you can see we're trading right into resistance of these previous highs here where sellers stepped back in last time. So that's kind of where we're trading, and we're under that level. So we're going to see crude oil probably still have some troubles here and probably flag sideways or head lower over the next couple trading sessions. Overall, this price action here still looks bearish. The fact that it sold down strongly and it's just having a light volume drift back up into resistance, we're naturally probably going to see it want to continue to head down. Looking at natural gas, we've got the natural gas chart. We can see we came down to support, had a nice strong bounce, had some news there. Inventory had a spike in price. Overall, we've come back down and we've pierced these pivot lows just by a couple ticks. You can see right over here, just enough to flush the market a bit. Overall, if we just zoom out and we go to the daily chart, you can see where we're trading here. We've got a nice three-wave pullback so far, very similar to what we saw over here. And with any luck, we're going to start to see natural gas pick up speed and head to the upside. I would like to see natural gas pull back a little bit more. You can see we've got some pretty strong volume here. Sellers are in control, and that's a good sign. We want to see if the market kind of flush out and shake the stops. But overall, we'll be looking for potentially scaling into a natural gas position as we are down at support, pierce the lows, and we've had a nice little three-wave correction within this uptrend. Looking at precious metals this morning, here is the gold chart. I pointed out yesterday how we were trading up at this key resistance zone. Again, just zooming out a little bit, you can see how important that level is. Every time we get up, pierce that level or get near it, gold just continues to sell back down with sellers in control. And you can see yesterday we had some strong selling and got a little bit of a bear flag forming today. It looks as though we could see gold continue to head back down, possibly even to this 16. Just doing a simple measured move here. You've got a move down, we've got a bear flag. If you just take this same measured move and go to the downside, looks like we'll come somewhere down to the 1600, which 1600 is a whole number. Naturally, you're going to have buyers say, I want in at 1600. And there'll be lots of orders sitting there, and that'll work as a support level. It's also right through the middle of this noise. You've got this kind of down wave here, so and this wave back up, you average that out, it'll average out around 16, give or take some spikes above and below, but overall you should find some stability if it comes down to the 1600 mark. Looking at silver, here's silver, same thing as gold, sold down yesterday, having a light volume bounce again this morning. Looks as though it still wants to head back down. Naturally, we're probably going to find some support around the 1750. Just do a simple measured move. You got to move down, bear flag, continue that move down. Just you pretty much take the same drop and add it over here to the bear flag, brings you around 1750. You just draw a line right across there. You can see you've got a whole bunch of pivot highs. You've got consolidation through here. You got a pivot high there, broke through it, pivot low, so that's naturally going to come out as a support zone also. So I wouldn't be surprised if we see lower prices in gold and silver in the next session or two. Looking at gold miners pulled back a little bit more yesterday, pulled back about 1.5%. You can see here they had a nice little drop. Just drawing a simple trend line, you can see we're more or less trading right at resistance trend line. It's trying to hold up. Overall, I pointed out last week that we had this rising wedge formation. We were coming up into resistance. It was probably going to get choppy and possibly reverse, and from the looks of it yesterday we had a pretty strong down day, and we could easily see prices come back down to the 43, 42.50 area, which naturally is going to find support through the middle of all this noise here. Looking at the SP500, here's the daily chart. This is the futures. We had a little pop last night. More or less, it looked like a little bit of a more or less a manipulation pop. Saw it just jump up. There's this previous pivot high that we had back here on May 1st. So just to quickly draw that in, you can see here we've got this little candle spike high in futures. And last night we saw a little surge of volume, and just enough to push it up, trigger the stops, and pierce that high and shake the market out. Overall, the market is getting overbought. It's had several up sessions in a row. We are trading pretty high above the 20-day moving average, so naturally it's going to want to either pause and actually go sideways and let it catch up, or we're going to see it pull back into the 20-day, at which point it may bounce, or it could even continue to collapse. But overall, it's looking ready for a pullback. If we go to the futures intraday charts, you can see this pierce of the high. If we just go last night after the market closed at 1600 hours, last night we just saw literally a little jump in volume, and what it did, it just sent price up enough to pierce the previous high that we saw back on May 1st. And you can see there wasn't even that much volume, but it was enough to jump it up, run the stops during the futures, and for anybody who's in the futures there, and then it started to pull back, and it's traded back up to push to new highs this morning. Overall, I think the market is really trying to shake people out before it reverses over. So anybody who is short, obviously is going to get shaken out. They're probably going to try and push the SP500 up again today, shake out people during regular trading hours, which is where the majority of shares are traded in stocks and futures, are ETFs. And then once they shake the market out today in regular trading hours, we'll probably see a reversal kick in and see prices start to pull back down. So that's kind of what we're looking for. And this type of price action will naturally, if I just go back to the daily chart, it would be more or less a blow off top, which means you'll see prices kind of shoot up fairly sharply, and then from there, either the same day or the next day, you pretty much see prices just start to head lower after that and pull back fairly sharply, just like what you see over here. You see a push up, a run of the stops, just enough to break some key levels, and then from there it's just selling from there on in. Very similar to what you see over here. You get that last push up. Usually you see a push just up into the highs. Usually it's a pierce of the highs or pretty much within a tick or two, and then from there you see prices pull back. So that's kind of where we're getting at right now, and I feel as though the market's just trying to squeeze any of the shorts out of their position before we get some type of pullback. Anyways, that's it for this morning, and I'll talk to you in a little bit. Bye-bye.